again?
Yep. All right. We are live. Sorry about those technical issues here on YouTube. We're getting all set up on the new channel and, still some learning kinks there, but we're back. We're here. We've got Joel. We've got Dennis. We've got the charts. Joel, let's just do another
Quick rundown. Yeah, we're up 7 handles, 60.23, developing some overhead resistance. See if we get through at that PPI number. The buck is up 29 cents here, 106.66. TLT up 27 cents, 90.07. USO in the green by 86 cents, 71.59. We have GLD in the red by over $2, 235.55. Silver ETF heading towards 27, down 37 cents at 27.24. Bitcoin futures, they're marching toward triple digits, up $1,555 at 91,810. Let's add Triple D to the stage here.
We've had a couple days of technical difficulties, and both Joel and I have colds, so this has just not been the last couple of days here. We apologize. Josh saves the day coming in here. Just he's out in Calgary, so it's 2 hours earlier for him here too. But he came in here, got the show going live, so we apologize here for the technical difficulties. We're going to fly here because we're 15 minutes late, so let's get right into it, AB. No messing around. House of Mouse earnings here. Go grab them for us. We'll talk to House of Mouse here. Break down the technicals. Joel's going to give us, or the technicals. AB is going to give us those numbers. And AB's on mute. We're going to have to figure out how to not mute yourself here. Oh, my gosh.
Okay. Sorry about that. Joel, if you want to go ahead and get the technicals real quick, I'm still pulling up the numbers here on
Disney. House of Mouse. Wow, up 869. I don't think I've ever seen a move in Disney this high. I'll just give you the pre-market high. Pre-market high comes in at 113. Woo! That's $1.50 away. We are almost off the top of the daily chart here. Upper right chart showing a big gap. I believe that was from the last earnings. I got a number I like, 114.15. That was your low on May 6th, so that will fulfill your gap. That day it closed at 116.47. House of Mouse going for the gap fill, as I said, at 114.15.
And always remember that 120. Never forget the 120. Not that that's coming into play. We're $8 away from there, but that is like the wall of resistance because multiple times we've played this from the long side to 90 to 120. It's a logical stopping point. So I mean, if you're in this trade, and obviously it's a long ways away from there, that would maybe be a target. But one thing to consider is this earnings season has been the earnings season where a lot of stocks, there's been some gap and goes, but there's been some wicked reversals too. Although most of the wicked reversals have been on the initial reports when the news is breaking, which we're going to go to Cisco here right now because we're going to fly through. Cisco, I'm going to have AB go get the numbers.
Real quick, Dennis, I was just going to get the numbers on Disney real quick. EPS came in at $1.14, beat the $1.10 estimate. Sales came in at $22.5 billion, beat the $22.34 billion. So double beat there. And then the guidance was pretty strong. So that's why you're seeing Disney obviously explode higher this morning. Let's go over to Cisco real quick. Give the numbers there. Cisco yesterday afternoon reported an EPS of 91 cents that beat the 87-cent estimate. Sales came in at 13.84 billion that beat the 13.77 billion. Adjusted EPS, they raised their EPS guidance to 360 to 366 from 352 to 358. So despite the double beat and the raise in guidance, Cisco stock is down slightly this morning, down 56 cents, closed up 47 cents yesterday. So we're all pretty much flat when it's all said and done here on the old Cisco.
Unbelievable move though after hours, and it's been the earnings season where there has been some wicked reversals. It seems like next day, like in the case of Disney, the reversals, the stock's traded enough that it probably, although Disney reported this morning, but it's been trading a lot of volume. Doesn't look like it's going to have a reversal. But on the initial numbers, we've seen this time and time again where stocks, and even, at the conference call, stocks do have wicked reversals here. Cisco last night, Joel, got up to $62. Yeah. I mean, it was a crazy move. The algos just couldn't stop buying them. And it was up there for a split second. And then they started selling it. And 5 minutes later, it was red. So unbelievable. And then last night, it was way down at under 50, in the 57s. and now it's bounced back up, so it's just been wild. Some of these earnings reports have not been simple, like, oh, beat, raise, run. It's been beat, sometimes raise, and sometimes run and then give it back. It's been a wild earnings season.
Yeah, wow. The pop and the drop hit 62. I wish it would have had something there on the monthlies, but nothing on the monthlies. Maybe the weeklies. Nothing on the weeklies either here. The 62.82. But we won't be revisiting that, but and then I don't think we're gonna see that pre-market low at 55.85 either. You're $3 off that. Holy mackerel. What moves in Cisco? I think you just do a reset here after you have that kind of after hours and pre-market range. Just go to your playbook from yesterday's session. For right now, 57.84, yesterday's low. We're still comfortably above that. We'll see what happens. Coming back on the upside after seeing the up and down and all around. A lot of people really like to see that mark at 59.18. So there you go. Cisco, wild range, but let's just stick to the technicals from yesterday for guidance in the Cisco Kid.
Talking about earnings reversals, Sonos was another one that reported earnings last night. AB, give you those for a second, but it's the same story here. Bring it up, Joel. SONO was way down on the initial report. It actually traded down to almost $13, which was down about 7%. Then they started buying it. Must have been on the conference call. And they took it up to flat, and now they've got it up over $1. So another earnings reversal. It's a day of earnings reversals here. Sonos earnings, AB.
Yeah, so Sonos reported EPS of a loss of 44 cents that missed the loss of 38-cent estimate. Sales came in at 255 million, that beat the 249.5 million. So what you mentioned, around 545, Sonos said they see Q1 revenue, so for the next quarter, coming in at 480 to 560 million. The consensus was 480 million. So they're talking about on the high end of the revenue guidance for Q1 being $80 million higher than what the guidance was. And so for, Sonos, which isn't bringing in billions every quarter, that's a pretty big, beat on the guidance there if they do end up hitting that high end. So maybe that could be why, they were buying it back there a little bit. So Sonos up 93 cents this morning, or about 6.5%.
Wow, what a round tripper here. Nothing really on the dailies at 13. I guess 1330. So you did get a little confluence with that 1306 low. That's not a part of the equation right now, at least early in the session. Let's look at $15. That is an area of interest here. 1509. You had a couple daily highs just over 15. Right now, you're at 15. Not sure if you're bid or offered, but let's see. For this one, it will be important to establish a $15 bid. Only 21,000 shares have traded this morning. So if you're looking for a continuation of this move, you have all those former tops from June and July at 15. Get a 15 bid, try and work your way towards 16. Coming back on the downside, if you're going for a short-term scalp, maybe on the short side, top of yesterday's range, a gap fill comes in at 1461.
All right, we'll keep the earnings train ticking here. Advanced Auto Parts. I do see a chat asking if I'm sick too. No, I feel fine. I do feel a lot better this morning. We had some astute observers that recognized my condition yesterday. Feeling a lot better today. Let's go over to AAP, Advanced Auto Parts. Advanced Auto Parts reported an EPS, a loss of 4 cents that missed by 58 cents. The estimate was 49 cents. They came in with a loss of 4 cents. Revenue of 2.15 billion, missed by $520 million. I mean, wow, that's not what you want to see, but the stock's only down 5%. So the guidance must have been okay at least, because that's a big double miss there. Stock only down again about 5%, $2 here this morning.
I mean, bar on the floor here too. The stock has been an epic disaster. Yeah, it's run up a little bit into the report, like we talked about that. Interesting bounce area, Joel, right at the 52-week low, but the pre-market here. What was the low? Just under 35, I think, or right around 35.
35. I got 35.61. No, 35 God. Even. 35 even.
Yeah. And then 35.59 is the low, 52-week low. So always be aware, like if you're trading an earnings report, have your 90-day chart up there and be aware if there's a big number it's coming into. Because if you're sitting here saying, oh yeah, we're going down further here, I'm short this thing at 35.5. Be aware there's a pile of support at 35.5. So even though we traded briefly through to 35, right back up. So that support holds. Now you're in a situation, can they rally it on a bad report? I mean, this is earnings reversal day. So it's possible. Nothing is out of the realm of possibility. Am I buying, AAP? Probably not.
Wow, what a move in this thing. Good call there on the former low, 52-week low. That might be an all-time low too for Advanced Auto Parts. Your rebound high after you made the low is in the 39 handle. It comes in at 39.35. So right there, that's your minor resistance. The bottom of yesterday's range, this might be a better number long term. $40, 40.07 was your low from yesterday. We'll call that resistance. And don't know if you're going to be able to get back to that mark at 40.94. What's your problem? What you're going to run into here is if you are trying to buy this stock on a dip today, there's overhead supply above overhead supply on it. And then on the top of that, anyone that picked it up here on that whoosh, because I don't know if the expected move was that much. I tend to doubt it. They're just scalping out. They don't care if the stock ever goes back to 39.01. They're just taking their profits on the short-term trades. I always like to look at the other stocks. O'Reilly, what are they doing? I said this before, AAP, I would go steal an executive from O'Reilly Automotive. That
Or
make it
AutoZone.
or AutoZone. Oh my Lord! Look at AutoZone just hanging up there near. Wow, making some major resistance on the monthlies here. So wow, just such different charts in the same sector. Big winners and big losers.
Earnings
I have a question
reversal.
for you guys.
Yeah, go.
Are the economists that make the consensus estimates for economic numbers, are they getting too good at their job?
So saying that the numbers are just, always closer to in line, AB, what are you arguing here?
Yeah, yesterday we got the CPI numbers and everything was just in line. It makes trading it kind of boring. Like I want to see either a big beat or a big miss. Like I'm going to give the PPI preview numbers here real quick.
Yeah.
But if it's any indication or anything like what we saw yesterday, I'm not sure how much it's going to move the market or matter.
They're going to be one tick off. What a great question. It makes trading a little more boring. It confuses the algos, I'll tell you that much. Like, clear miss, they sell, clear beat, they buy. When they come in line, the algos really don't know what to do with it. So that's where you get the chop fast, the wild action. But you're right. Like lately on the, inflation data, at least, it seems like we've been in line a lot of times. Like how many times? Like that's like chat or AB. I don't know if you have those stats in front of you, but just selective perception on my part. Feels like we've been in line a lot on the inflation data.
Yeah, the recency bias the last 3 months, I feel like every single time we get economic data, it ends up being essentially a nothing burger. But okay, we're looking for this time a median forecast of 0.2% growth for the producer price index. It was previously 0.0. We also have initial jobless claims coming in. That's going to be 220,000 is the estimate. It was 221,000. Previously, core PPI year over year. I don't know. It's supposed to be 0.2%. It was 3.2% previously. I don't know if that's exactly right. So either way, we're about 2 minutes away from those numbers. But again, these guys, they've just been all over it. You got to give them credit.
Yeah, it's a good point. Joel, I mean, we're going to go into this. Can you give us some levels on the S&P, Joel? Actually,
yeah, that's
levels on the IWM. Give us levels in the IWM because the IWM cares more about the inflation data than the S&P. So yesterday, summering up the IWM, pretty vicious sell-off actually most of the day. We're snapping back and bouncing today here. Give us some levels to look out for on the IWM.
All right, big all range yesterday. You're up $1.27 here. a ways away from yesterday's high. So you've had two lower highs after making that recent multi-year high, getting near your highest level since 2021. So out of pop, I mean, you're still $4 off yesterday's high at 239.86. Nowhere near the levels. So man, I think I would have to find like a daily pivot number to find something a little bit intermediate, 35, 40. That's probably like I'd call it the 237, 237 and a half area for your pivot. So far, your high in the pre-market session is 237. So if you're looking for more follow through on that, but the IWM, he takes out yesterday's low. You got that gap out number from election day. All the way down. In order, man, that gap, that's one that a gap for the ages, 224.29. But I got to go to the S&P here. It's been pretty quiet. Going to go to my 1 minute chart as we are just coming up on those numbers here momentarily. Your pre-market high, we're right there, 25 and a quarter.
I'm going on mute.
Okay, going on mute. If you want to take out that pre-market high at 25 and a quarter, there are two pesky highs from Tuesday and Wednesday, 35 and a quarter and 35 and a half and 36 and a quarter. Above that, Friday's interday high. But right now, it looks like we're just chopping here, waiting on the release. We did have a pre-market low at 6004. That's a ways away. That's 18 handles away. I guess as we wait for this number to come out.
All right, we got the numbers.
Wow.
2.4% versus 2.3%. So 0.1% higher than the expectation. PPI month over month for October, 0.2% versus the 0.2% expected. Another inline number. US core PPI for October, 0.3% against the, you guessed it, 0.3% estimated. Initial jobless claims 217,000 versus the 224,000 estimate. So they missed there a little bit. We got to start nitpicking these guys when they miss just barely. So either way, pretty in line here. It looks like, Joel, what's the reaction?
Oh, wow. Really pretty quiet here. The S&Ps have barely moved. Let's get the 24-hour chart. You had a little spike down in the IWM, but that quickly recovered. Yesterday's low in the IWM, 34.83. You got under that just a little bit. You went to 34.65, but we're starting to get a fade here a little bit. Why don't look at the TLT? The TLT was trading higher, right? And now that is selling off, so that's not good. S&Ps, now we are getting the real reaction here. They're not liking that number in line or just a little bit worse here. Coming back down to unchanged and actually now in the red here. 16 even was your close. So they took it down there. So stubborn sellers out there above, not biting on the inline number. The food and energy 0.3 versus 0.3. So a little bit of a sell-off here. But right now, the battle's going right here at unchanged at 6016. Boy, a lot of sixes in the numbers today.
All right, let's bring it back to some individual stocks here. Let's go to JD.com. Reported earnings this morning came in at $1.24 on the EPS. That beat the $1.09 estimate. Sales came in at $37.1 billion. That beat the $36.54 billion estimate. So we've talked about China's weakness since the election last Tuesday, but JD getting a little bounce here this morning, trading up, only 91 cents. I thought it was going to be up a little bit more after that report. So JD up slightly, BABA down again. I mean, if we just look at the K-Web, that's down again. So despite a strong earnings report from JD, China's still overall weak, and it looks like JD is giving back some of this pop back.
Yeah, so showing that chart again, Joel, JD, I can't see the pre-market chart there. So there you go. You can see the earnings reversal once again. Here it's earnings reversal day, folks. So down significantly on the initial release, or at least ahead of the release. Then we've obviously got stock popping up here now, trading up over $1. So it's earnings reversal days, Joel, or So what do you think of that?
Up 76 cents. You had a nice gap fill here. Did you get a gap fill? Yeah, from going way back 33.37. Nope, not quite get it there. You got the 33.95, so $2 above that. Man, this is wow, what a bunch of air in this chart. I guess to fill the other gap in this thing, you got to get up to 38.60. No, is that right? That low on that day, 38.62. Man, no man's land here. What I'll do is I'll keep an eye on the pre-market high. The pre-market high, 36.72. You're 40 cents away that, so you need follow through. Coming back on the downside here for JD. We'll find potential support at that close from yesterday. That comes in at 35.69. S&P's continuing to leak here, Dennis. Off that inline number, was there much activity?
Well, it was slightly hot, right? We were tick hot, AB.
We were,
It was tick hot. The inflation number.
Let me confirm real quick. Yeah. It was 0.3. No, yes, a tick hot. 0.2 or 2.4% versus the 2.3% estimated.
Okay.
The overall.
Okay.
Yeah. And then the core PPI year over year was 3.1% versus the 3% estimated. So a tick hot on both the year over year PPI and the core year over year PPI. The month over month came in line at 0.2%. But to my point, I mean, even at this point, when there is a disparity between the estimated number and what we actually get, it's by 0.1%. You go back like a year ago, and I think it might also just be the conditions we were in when inflation was really high and then started to come down quickly. Like we really didn't know. I think now people feel a lot more comfortable knowing that at least while prices are still much higher than they were 2 years ago, the growth of inflation has now slowed down to a more historic average. So we're not in kind of this we don't know what was inflation 8% last month or 5%. Now it's always within this very tight range. I do see our first guest hanging out backstage. We're going to talk to Sean Emory, the founder and CIO of Avory Co. Let's go ahead and roll our intro and bring Sean on.
All right, we do have Sean Avory on the line, founding partner of Avory and Company, joining us here on Market. Sean, looking dapper here this morning. Thanks for joining us here. We haven't had you on in a while, but what's been on your radar as of late here? Quite a nice movement in the market since the election.
Yeah, what's going on, guys? And good morning. Yeah, it's been a lot going on over the last couple of years. We've spoken maybe a couple times. Our view again, there was a kind of this barbell story. It was jobs or it was inflation, Fed attacking, one or the other. And I think we're much more of in a stable place from a macro top down point of view. Inflation. You guys were just talking about it on PPI and CPI. So that is kind of moderating, normalizing. It seems like people are becoming a little bit more comfortable with a little bit elevated relative to historical, inflation readings. If you go back in time, though, valuations at these inflation levels are in some ways pretty normal. Rates at these levels relative to history, are pretty normal. We're more excited about, some of those small and mid caps. You're hearing that, but we've been talking about it for a little bit, and not all mid cap and small caps are, I think, the same. So there are some interesting ideas. I think the software space has been kind of forgotten, which is interesting relative to 5-6 years ago. A lot of that has to do with the Gen AI, fears and, anything that's has variables associated with small and mid-sized businesses, i.e. the economy, and, Gen AI. I think those two things are impacting the valuation multiples in that space, and that's pretty attractive to us overall. So anyways, I'll stop there, but that's kind of an area that we're talking to our investors about.
You mentioned AI. You mentioned AI, the AI craze here. Obviously, you have your poster childs and NVIDIA, those stocks. I mean, a lot of people thinks that AI has just gotten way ahead of itself as far as when it can actually turn into monetization. Where are you at on that?
Yeah. Obviously there's like some pretty, obvious things that we all can do. I can send you an email and, make it sound, poetic. And, those are some of the lower hanging fruit. There's some stuff on the back end. I think, someone like Meta is performing pretty well because of what's happening on the algorithm side in terms of personalizing our feeds. At the same time, they're trying to enhance, the ability to, for their creator ecosystem to have, some of the bells and whistles to create the content and the advertisers to create some of their scripts. So those are some of the lower hanging fruit. Now, I think over the last, call it couple months, you've heard a lot about, agentic AI. There's the UiPath of the world, and then you had Boxworks, which was their, event here recently. You have Salesforce talking about their agents. There's this whole concept of the agent, phenomenon that I think is starting to, bubble over. And my view on that is it almost seems just like an iterative step from where we've been. A lot of these platforms have had automation embedded. And now everyone's talking about, agents embedded inside their ecosystems that are going to talk to each other. I think, one way of looking at that is it's where we were kind of like years ago, where you had a no code platforms, automation built in, APIs that were connecting, my database with your database. And, it was more logic based, meaning I want to send an invoice to this person. If this person clicks this, I think these agents sound very similar to what that is. I think maybe the method of putting that agent together will be easier because we'll use our own natural language to do that. Hey, agent, connect my monday.com to my box.com, and please, anytime they fill out this, do this. So I think the process will be a little less manual, but it only feels a little bit more iterative. And then, valuations, investing aside, I mean, we're product people first and then investors second. And that's kind of how, some of the tools we're seeing in the AI space that are, being talked about a lot here.
Yeah, and I think a lot of the big companies are still figuring out exactly the best way to use AI in their operations and maximize revenue. And, right now we're still seeing the major tech companies, whether you're talking Meta, Amazon, spending all this money on AI infrastructure. While they're still figuring out how to perfectly, use that and optimize their AI, like, do you worry that there could be a slowdown in those investments? Like, how would we see that? Would it just be in earnings reports if Meta says, hey, we're actually going to slow down our buying of NVIDIA GPUs while we figure out exactly what we're doing with this AI, or we're not seeing any slowdown like that right now?
Yeah, look, it's going to probably start at the, that's probably, if that's the tail, you have to look at the head in terms of, what are other companies doing with this stuff? And kind of what I was referring to was really the head, right? Which is all the companies that are building these agents that are querying a lot of things and, using some of the compute resources that the NVIDIAs and Microsofts and Amazon are using. So right now you continue to see that progress in terms of all these agents, and, some of these things aren't live yet. Right. So, there's still a lot of runway for trial and error for many of these companies to actually embed these products, which requires the compute resources that's needed. There's obviously the power dynamics, also that, there's some hindrance there in terms of having enough power. But it feels as though we're still early in the game in terms of some of these compute resources. Someone like Microsoft or Meta has mentioned that, even if they spend too much, they'll have enough, usability with some of this compute within their own ecosystem. But, again, I think those are the lowest hanging fruit, the ones that are the obvious choices in this space, which is the Amazons, basically the hyperscalers, plus, some of the biggest enterprise, platforms that exist out there. Net, I think this could ultimately end up just being a churn story, meaning as companies embed more and more AI into their products, think like Zoom, for example, which you get Zoom AI Companion essentially for free for now, even though they just announced custom, companions where you can, i.e. agents. As when I use my Zoom now, I use AI Companion and I get these beautiful summaries at the end, and it's going to make it much harder for me to turn off their platform. So I think in some ways may not even be like a revenue story for some of these companies. It may just be a net churn story for some of these companies, which ultimately drives lifetime value of a customer and then profitability. So, there's no perfect answer to your question. I mean, I don't think we exactly know where this starts and ends, but I'm trying to think of the product side, because I think ultimately that's what matters for these hyperscalers is, are people still building products? And if so, they're going to need compute resources. And that's really where we're thinking about it.
Hey, Sean, interesting you bring up Zoom. I just want to bring to Kathy Wood, because this was one of her darlings at one time. And what we've noticed here is that a lot of Kathy stocks, ARKK, a lot of Kathy stocks have really turned it around. I mean, she had a really, tough couple of years. There's no doubt about it. But in the last few months here, it seems like she could do no wrong. There's so many of her stocks that are going higher, obviously led by Tesla, but to Palantir, to some of her smaller names too, and Zoom being one of those names as well. Here is this, and Zoom's maybe a little different story because the valuation actually is reasonable on Zoom. Is this a story of just people now jumping back into Kathy stocks overall? What are your thoughts here, just on this run and flight to growth?
Yeah, look, correct me if I'm wrong, but I'm pretty sure she sold out entirely here in the last 6 months, and I think that's the catalyst.
Did she?
Yeah. So
she hates it when fees get too low.
Yeah, she's a value shop.
Is that right? Chat'll correct that. I did not know that, because she was a huge, if we just go to the ARK holdings, she could be right. I don't follow with that. There's 38 of them, 38 holdings. Let's go see. I want to see. So number one, well, again, it just changes all around here all the time, but she got Coinbase and Shopify and DraftKings. I'm trying to see if Zoom's in there. You could be right. I don't see any Zoom.
That was the catalyst. We watch it closely. We're investors in Zoom. And we weren't in the mania part of Zoom, to be quite frank. And full disclosure, again, we own it. We're more growth, GARP investors than we are, full blown growth investors. And again, we're above our cost base at this stage. The good part about that, again, we were monitoring ARK. They were trying to leak out of this position for quite some time here.
Wow.
It's the catalyst. You had about $200 million of liquidation happening from them over a series of several months, of which, maybe some investors were front running that because you can see their trades actively. And if they're leaking out of it, there's 200 million to sell. And unless there's the amount of buying power for that. So that took the name all the way down to 55. And if you were accumulating at that point, knowing there was kind of a quasi forced seller, at that stage, I think that's where you wanted to be a little bit more aggressive, because you knew this was more technical than it was fundamental. And then if you cover some of our work in terms of data tracking, you saw phone business doing well, contact center business doing well for Zoom. So it was setting up pretty well for a reacceleration of growth for 2025 here coming up. And then now ARK is out of the way. So in a weird way, the catalyst was actually ARK getting totally out of the way. And drying up a lot of that selling pressure. And that was, if you could probably, you could pinpoint it within a week where Zoom bottomed and then it started to rally back up.
Huh?
Wow.
Yeah, boy, I took my eye off this one. A stock that I got wrong still wrong. This Starbucks here. Come on. They bring the guy over. They give him all this money. It's held the gap. I'm just flabbergasted by the price action. I know they've got some cheerleaders on Wall Street and everything. What's your assessment here of Starbucks, SBUX?
I like your questions. You're right in my right down my swim lanes in the last 24 hours. No, but look, Starbucks is an iconic brand. It's great. I think we all originally appreciated the what it is, and originally the coffee as well. But if you go there again, it starts with product. We talked about AI first before, but product matters, and ultimately that's what drives consumption of anything. And it started to become stale and way too much going on and a little less friendly. I think the authenticity of Starbucks back in the day was really its magic sauce. It wasn't really the coffee. it was writing my name on a cup and handing it to me and saying my name again. And then going in there and kind of feeling like, again, they would call it like whatever, the third or fourth space, whatever you want to call it. And that started to dissipate as they were trying to, drive throughput into it and then attach, food and, all these other stuff. So I think they lost their way. It's really a product story. This isn't anything more than that, I think. And our view is simply, Brian Niccol, we invested in Chipotle back in the day when he took over. Thankfully, he did a really good job and, we were rewarded there. But the Starbucks, I think this is going to be a bigger challenge for him. It's a much different dynamic. Chipotle was really around hone in the edges, make sure there's no more, salmonella breakouts and stuff like that. But then there was a growth opportunity. There was no real mobile loyalty program at the time. There was a store count that was pretty small relative to the size of the brand. There was a menu that was condensed and had the ability to flourish into new things like, carnitas and all these other things. If you take that approach and you look at the playbook he had at Chipotle and take that to Starbucks, completely different. Our view is that actually he has to shrink this thing, get back to the authenticity before he can even decide to try to grow it going forward. So that's a different playbook, but he's the right guy to do it. He's really, really good. But pricing has to, stabilize and come down, ironically. And then he has people on his edges. Dunkin' is taking app download market share. Dutch Bros is on fire, is now 7% of all app downloads. They just announced their mobile ordering here in the last year. And, if you heard the earnings call the other day, it was pretty successful. So they're adding 100 plus stores a year now. So we'll see what happens to Starbucks. But it's an iconic brand, the right leader. It's going to have to shrink before. So I think this will be a cruise ship and not a quick turn versus, maybe what people are expecting.
So you mentioned Starbucks, has that iconic branding. We were talking Disney earlier, obviously coming back. That's an iconic brand. Lululemon, I'm not going to throw it in the iconic brand category yet, but it is definitely a very well-recognized brand, was a darling of Wall Street for a while, seen as kind of a best of breed in the apparel space. And obviously huge downturn, growth slowed down, now starting to pick up some steam again. Is this another one where you can kind of just like come in and say, hey, look, the brand name is there. People are still going to be buying Lulu, willing to buy it here on the dip?
Yeah. Retail in this category can either be really good or really bad. Sometimes when they lose their way completely. And, these things become significant value traps. Look, all I can say is, Lulu is a good product. The people that use Lulu love Lulu. They still are underpenetrated relative to, I think the scale and size of the underlying brand. The magnitude of revenue relative to, some of their, I would call them like semi-comparable brands out there. So there's more room there. I think the smart thing they've always done is stay out of the wholesale channel, which is like the department stores and things like that. And really owning their distribution. They made some mistakes during COVID, right? One, they had a massive amount of demand. They went out and bought Mirror, had to shut down Mirror, and lost their way a little bit. They messed up a little bit also on one of their recent launches of a certain type of material that didn't hit the same way. Now, categorically, there's obviously other people out there, and one is Avory, who is raising money like crazy in the private markets. They're taking meaningful share. And, the bigger question there is, can Lulu stabilize? And we're seeing early traction of that taking place. They ran a sale here, in the last month or two, and year-over-year growth within that sale period, which was really like a 7-day period or so, double-digit growth in that period, but then it fell off again. So the question is that stabilization, or now are they having to promote to sell? And that's I think the underlying question that I think people have to think about. Look, it's a really good brand. I think it'll be here forever. I think the Vuoris of the world are more likely to fall off than Lulu is to fall off. But Vuori's raising capital, opening stores, getting in more distribution points. So I do think over the next couple of years, they're still going to have this pressure until the Vuori and what's the other brand?
Absolutely. You have Aloe.
Aloe. Yeah, there you go. Aloe.
Yeah.
Yeah. Until those start to, I think compress again in terms of those are more fads. I mean, the irony of Lulu is like you don't wear the logo, right? And I think that's super important to differentiate. Aloe, everyone's wearing Aloe. Sometimes, other than Nike, anytime you're just like flashing logo, I think it's more trendy than it is anything else. Aloe, you're wearing an Aloe hat or Aloe socks, and that stuff gets old over time. And so I think that's kind of how I look at this space. It's very hard to get these things right. You either buy the growth store, or you buy it when it's deeply valued. Somewhere in between gets a little skittish because then you're making a really big bet. And if you're wrong, the downside's significant because it's not a value. And then, if you're wrong on the growth side and you're paying, on holdings growth, then, if any slip in earnings, you're going to get blasted. So,
well, are there any brands in the, retail apparel space that because like going back over the last year and a half, we've seen what's gone on with Abercrombie and Fitch. Like there is money to be made in this space. You got to find those stories that have the growth. Are there any right now that you think could be the next Abercrombie or, ones that you're looking at?
Man, like you're saying more of a turnaround than
just something with sustained growth. I guess in Abercrombie's case it was a turnaround, and on Holdings' case, not really a turnaround, but the growth has been impressive enough for the stock price to double. If there are none that stick out, then that's the case. I just didn't know if there were.
Yeah, not in like fashion retail. I mean, like Dutch Bros, I think is a freight train happening. So like that's not obviously fashion retail, but it is some sort of like a physical retail play, and it's somewhat lifestyle coffee, whatever you want to call it. But in the actual fashion specialty space, no, they're like On Holdings is doing really, really well. Again, they win on performance first, and then win on style. And I think that's a big difference between pure fashion. Like Abercrombie's winning with fashion today. They nailed trends, and they're winning on trends. Look, for us is we want to understand whether the current environment for that brand is sustainable. Meaning, if On's winning with performance, that's more sustainable generally, versus winning with just pure fashion when you're not like a luxury brand. And that's kind of how we break it into two. Is this sustainable demand versus trendy demand? Are you building a real brand, or are you just building like cool stuff that people want to wear? And so that's like the differentiation. And then two is we just follow credit card data to try to gauge and just track like what's happening. So like we're seeing some interesting stuff at Lulu right now, right? On Holdings demand on credit card data still is really robust. Abercrombie was doing really, really well, but I would categorize Abercrombie as, no one really cares if it's Abercrombie or something else. They care about what the current trend is and what they're putting in the stores right now. But if Abercrombie didn't exist in 5 years, I don't think anyone would actually care. So, they just care about what they're wearing or what they're buying there. So that's kind of how we look at it. It's a fickle space. So you have to be like very strategic about it. And we try to strike when we can, but generally you want to stay away from most of those. But we have a good understanding of it at the very least.
Yeah, you have to be nimble. And like the Abercrombie story was just they hit the nail on the head in reinvigorating their trends and apparel and fashion. And so they've been rewarded for that. But we've been on the line with Sean Emory, of course, the co-founder and CIO of Avory & Co. Always great to catch up with you, Sean. Get your thoughts on a bunch of different sectors. We went from AI to fashion to shoes. Fun shows.
All over the place. Cover it all.
Got to be a generalist in this world these days. Everything's tech and everything's So, but
all right, Sean. Well, we'll catch up soon. Enjoy the rest of your Thursday. Take care. Thank you again for joining us on PreMarket Prep this morning.
All righty, guys. Have a good one.
Thanks, Sean.
All righty, y'all. It is now 3 minutes till 9 a.m. Any breaking news while we were
Can we cover the Lunar? Let's slip the Lunar in right before Michael Pachter is going to be on here in 1 minute. But let's slip Lunar in. We haven't covered it yet. The chat's buzzing about it. Obviously, I've got the long-term position in it. It's a big pop. I mean, we saw it with Rocket Labs yesterday, a big pop. And that pop eventually started to come in a little bit, but it popped a lot more than you think it could. So Lunar has been steadily climbing here most of the morning, coming off the highs just a little bit right now. They really went parabolic when it got over 15. AB, you have those earnings for us?
Yes, sir. So sales came in at 15 even know. 58.47 million. The consensus was 50.89 million. So beat there by a little bit more than 7 million there. And then I'm not seeing an EPS number here. So, but we did have a net loss of 80.4 million, down from net income 14.3 million year over year. So either way, that sales number did come in higher than the consensus here, 58.47 million against the consensus of 50.89 million. Stock is trading higher by about 18.5%, or $2.20 this morning. This is after Lunar closed up more than 13% yesterday, so right around $14 a share as we head into the open.
It's been an impressive run here for Lunar. I think we picked this up around $7, so this is almost double for me now. A lot of times when my stocks double, I sell half, and then I'm always playing with the house's money. I may do that today. I'm going to take a look and analyze it a little bit. Here it is coming in here right now, though. Michael Pachter waiting in the background. We're going to bring him in right now.
Yeah, right. 15, I just want to throw 15 out there. I believe we talked about this one a little bit earlier. Or no, there was another stock where it had the resistance at 15. But pulling back here, top of yesterday's range. Wow, this had a big old range yesterday. $13. Keep an eye on that. $12.99 was the top of yesterday's range.
All right, you mentioned it. We've got Michael Pachter back-to-back days with Wedbush guests, so that's exciting. We love our Wedbush guests here. Let's go ahead and give Michael our special pre-market prep intro and catch up with Mr. Pachter when we come back.
All right, Michael Pachter, Wedbush analyst. Been around the street a few times. Michael, how you doing today?
I'm feeling extra special. Thank you, guys.
Yeah. All right. Well, gotta start with one stock that the chat is buzzing about. AppLovin, APP. You pounded the table on this thing. I don't know what your targets were. I don't imagine they were up and down close to 300. Talk about this stock. Talk about what you told us before and what your target is. Can this move continue?
Boy, the last part I'm not sure about. Whether it can continue. Look, the story is that when there's a mismatch of understanding between what a company actually does and what their competitors do and what investors think they do, they tend to swing wildly in both directions. So AppLovin is just a perfect example of a company that's just way too complicated for most people to understand. And I don't mean that people are dumb, and I don't mean that management is bad. It's that they're in a really odd niche of the internet that is big, growing, and really profitable. And they're better at it than anybody, but they don't do a very good job of explaining that, breaking it down. So people think they're doing something that they're not. And I'll explain what they do in a second. But when Apple came in, they had these rules called identification for advertisers, IDFA, and they changed them in mobile. And they told advertisers, you're no longer going to be allowed to follow a customer on iOS. And then Google followed suit. Same thing with Android. If you guys remember way back when, you might do a Google search, look for a T-shirt on Amazon, and then you'd be reading the New York Times on your phone, and up pops the T-shirt ad, and that happens. The ad follows us around. That's IDFA. And so when Apple stopped doing that, everybody said, oh my God, AppLovin, they deliver ads in mobile. So they're not going to be able to follow their customer anymore. And the stock went from roughly 80 down to about 10. It dropped that much. And that was, no kidding, 2022. And then their competitor Unity got in trouble, and the stock kind of just drifted around. And then they started executing. So what do? They deliver ads in mobile games. Great. Not to mobile, in mobile games. That's different. So delivering an ad in a mobile game takes specific expertise, because when you, a consumer, are playing a mobile game, you want to make sure that, your experience isn't disrupted. The reason that people play mobile games is for fun. The reason companies create them is they're free and they hope they can get you so engaged in the game you spend money in the game. You buy lollipop hammers in Candy Crush, right? Or you buy card packs and try to upgrade your heroes in a role-playing game. And the only way that you're ever going to spend money is if you play the game a lot and you're into it and you invest in it. So what happens if an ad pops up and takes you away from your game experience? Well, the game maker is suddenly upset because he might lose you as a customer. So it's a particular skill to deliver an ad inside a mobile game. Now, the interesting thing is, as you guys all know, advertisers try to get the broadest possible reach. So they'll deliver an ad on television, a Super Bowl ad, and they might pay $1 million for a Super Bowl ad, but 1 billion people watch the ad, right? So it's really not that expensive to spend $1 million if 1 billion people see it. In mobile, you're never going to get any kind of traction paying, a penny per view, $10 per 1,000 views. So where is it lucrative to advertise in mobile games? Only if you're another mobile game company trying to attract users. So obviously, if I'm playing Words with Friends, I might be a slot machine game player, Slotomania. So Playtika might advertise Slotomania to me. Why? Because half of Slotomania players are 50-year-old women, and 50-year-old women happen to play Words with Friends a lot. And Words with Friends will take the ad and display it. What does that pay? About $80 per 1,000 views. So really lucrative. And who is the best in class at delivering a mobile game ad to a mobile game consumer? AppLovin. Why? They have amazing technology. They have an algorithm that basically tells them, what you are doing in the game. So they actually figure out your tendencies. So as opposed to, Snapchat getting ads for I forgot the name of the stuff, Clearasil, Clearasil and Red Bull, because they know that Snapchat users are teenagers. In mobile games, it's much, much more specific. So a Call of Duty player, obviously you want to advertise a shooter game, or a Fortnite player, or a player unknown Battlegrounds player. But again, AppLovin's better at it than anybody. So what happened was IDFA came along and the market thought AppLovin's getting crushed, when in fact Facebook and Google got crushed. Facebook wasn't able to track what you were doing on the internet. And so the Facebook ad network that would sell ad space to other tech companies but would actually help deliver that ad, they dried up. And who took their share? AppLovin. So what we saw over the last several quarters is AppLovin revenues are growing essentially 30% a year, 38 last quarter, but 30% per year consistently. So they are absolutely crushing the competition, and they're converting that incremental revenue at something nearing 80% EBITDA margin. So we had this company go from mildly profitable with concerns that they were running out of runway and running out of revenue and profits, to dramatic profit growth and even more dramatic earnings growth. So the stock ripped up. To answer your question, when it was at 10, I had a $70 price target. That's why I pounded the table. When it was at 120, I had a $170 price target. And when it ripped right through that at 230, I went to 270 and had trouble getting higher than that. So my target's 270. The stock's at 280 something right now. What's it worth? It's trading at about a 25 times EV to EBITDA multiple, which just says that 25 times its pre-tax income, essentially. And that's a lot. I mean, that's saying that you'd rather put your money in AppLovin than just putting it in a savings account. You get a higher return, 4 or 5% on a savings account. And the question is, will they keep growing beyond this level? I think they might. We don't know. It's hard to say how sustainable this is. Now, here's the problem with the industry. How much room is there for mobile game advertising to grow? Not advertising in mobile, but ads by mobile game companies for other mobile game customers. There's room for it to double, maybe triple. That's about it. Why do we like AppLovin? Why is the stock ripped $100 in the last 2 weeks? because AppLovin figured out another lucrative area to advertise, which is e-commerce. And what they're able to do now is, instead of putting up a banner ad for Taco Bell, they'll put up an ad that says, order online now. And if you do, then they get $7, $8 per order, right? Which again, on 1,000 impressions will come out to be about $8. They'll end up getting real money. Are we going to do that? I don't know, but maybe.
Why?
So does it hurt game companies? Absolutely not. They know that their customers have to eat, so they like Taco Bell ads. That's why the stock's up. So how high is high? I don't know. Let's watch them a couple of quarters and figure it out. Yes, I'm sorry,
Michael. I don't play as many games on my phone as I used to when I was younger. But when I do now, what I've noticed is that a lot of the games, the free games, like you mentioned, I'll get an ad that pops up, but the ad is for another different free mobile game. Like what is the business why are they doing that? Because if all you're doing is advertising a different free game, then I go to that one and they're advertising a different free game. I'm not buying anything there. Are they just trying to get people hooked on these games and then make those in-app purchases?
Well, the idea is that if you see it pop up for another game, you'll click through, you'll download the game, and you'll start playing that game. And these are law of large numbers. The math in mobile gaming, this is just rule of thumb, is about $1 per month per monthly active user. Now, the truth is only somewhere between 2 and 10% of monthly active users spend money. But if you get, say, 1 million monthly active users on your mobile game, you will make about $1 million a month, because the 50,000 or 100,000 who spend money will spend 10 times that. So the idea is law of large numbers, right? So you want to get the conversion, you want to get the players to see your game. Now, the interesting thing is the mobile game companies are on the spectrum of, yeah, what a great idea. Let's advertise, let's take ads and make money that way, to hell no, never. No one's advertising in our game because we don't want to lose our customer. The guys who are enlightened, Zynga with Words with Friends, they don't actually sell you anything on Words with Friends. So Words with Friends is an ad-supported model. And what Zynga noticed when they started taking ads for that game is they had zero attrition. People tough it out and watch the ads. Why? Just like YouTube. We all watch ads on YouTube. Why? Because we want to see pre-market prep. So we're going to put up with a 30-second ad.
Take who owns.
Right. So the other end of the spectrum is, I have a really crappy game, and somebody's going to advertise their really great game, and I'm going to lose my paying customer because he's going to go to their great game and leave my crappy game. Well, two responses to that: make better games and get over yourself. So the reason I brought all that up is, we still have this model in television, right? If you watch broadcast TV, have you ever seen an ad for an ABC television show when you're watching NBC? And the answer is, except for playoff football, never. They never mention the other network. Except for playoff football, they'll say, okay, the other league's playoff game is on the other channel, because they know you're going to switch. But truthfully, and I know you're too young to probably have ever watched broadcast TV, but if you watch broadcast TV, do we just turn on the same channel and never change it? Well, yeah, if we're a Fox News viewer, but short of Fox News, no. We watch different channels. We flip the channel all the time. And the crazy thing is that some of the big companies like Disney know that, which is why they put some football games on ABC and some football games on ESPN, right? Everybody in the Olympics knew that. Peacock knew that. They put it on 10 different channels to put the Olympics on. So, if the television networks haven't figured this out yet, how are the game guys going to get it? But truthfully, that's the most lucrative area. And that's why I said it has potential to double or triple, and it will happen. This e-commerce angle is pretty interesting. When you open up the floodgates and you say, now we're going to take much lower revenue, lower profit brand advertising in mobile, and everybody will take that. Then you start looking more like YouTube, right? You start looking more like Facebook, where you're just helping target the ad. And that's where I think AppLovin gets super interesting, even though it's lower revenue and lower profit, because mobile games viewership, playership, engagement is about on par with Facebook. No kidding. Like, the number of people who play mobile games, the total hours spent, on par with Facebook. And the total mobile games advertising ecosystem is about 1/5, 1/6 the size of Facebook. So the room there is to go up 5x, 7x, just because you take regular brand advertising. That's what Unity is going to try to do. But again, is it going to happen next week? Probably not. I think we've got some time.
That's what I wanted to get into. You brought yourself right into the stock that I wanted to cover was Unity. They canceled this controversial runtime fee a couple of months ago. The stock got a lift on that. It faded here after earnings. Michael, I actually, full disclosure, I own some Unity myself. What are your thoughts here on Unity?
Unity is a mess of their own making because they overspent on growth. The board figured it out, fired the CEO. The CFO left he went to, I think, Western Digital, but he didn't get fired. But then the new CEO, who came from outside, has been kind of systematically getting rid of anybody who was deemed to be a loyalist to the old management and bringing in his own guys. He's competent. His new guys are competent, but they're not all there yet. New CFO doesn't start till January 1st. So investors haven't talked to them in 6 months. They're not really there. They're not doing conferences or marketing or anything. The new CEO's vision is let's be efficient and profitable, which is great, but he hasn't exactly told us how he's going to get there. He's getting his lunch eaten by AppLovin on the ad tech side. So, his defense, which I actually endorse, and I think he's right, is they're never going to take 100% share because advertisers want to keep them honest and have a healthy competitor out there. That's true. And it will be Unity. I mean, Unity's number 2 by, large measure over number 3. So, question is, do they get it right? And they're reworking their tech stack. I'd say this is like AMD versus Intel back in the 80s and 90s. You looked at AMD as the crappy little company, and Intel kept innovating, and then AMD kind of clawed its way back and competed and innovated. I think that we're like that now, and I think Unity will figure out the AppLovin tech advantage and emulate it, rip it off, and deliver the same experience to customers. So I think customers are waiting for that to happen. The good news, though, is brand advertisers, are getting screwed by broadcast television people cutting the cord, and streaming services rising up that are not ad supported. Obviously, you have a choice. Netflix put out a number the other day. They have 70 million people on ad support, but that's still 70 million out of 280. So still 3/4 of their customer base doesn't watch ads. If you're watching TV without ads, then advertisers have nowhere to go, and they have to figure that out. Facebook and Google have 50% of the global ad market right now. They're just not going to grow faster than GDP. Maybe they'll come up with new products. Mobile gaming has literally 2% of the global ad market right now, and is just as big as Facebook and nearly as big as Google. So, will it grow to a couple $100 billion? I think so. From 20, it's going to grow that much. So I like that Unity's there. And the cool thing is AppLovin's tech advantage doesn't help for brand advertising. They know what I'm buying in my game. They know I'm buying a lollipop hammer. That doesn't mean I like Taco Bell instead of Burger King. They actually can't figure it out. They've got no better information on demographics than Unity does. So I think as brand advertising migrates to mobile, and it's going to happen, mobile game companies are going to embrace that because it's not threatening to them. They're not worried about losing their customer, and Unity is going to thrive. I just don't think that's a next quarter or 2 or 3 quarters out phenomenon. I think it's a 2 or 3 year phenomenon.
Investors going to have to be patient with this one.
Yes.
Stick one more gaming stock, and then we'll move on from game. But Roblox, RBLX, because here's a stock that had a pretty good quarter. Gap and go, moving up here. Thoughts on RBLX?
I love them more than anything on my list. It's on our best ideas list. The thing I said before about gaming companies not wanting to take advertising, turn that upside down. Roblox wants to take advertising. So, the number there, they've got about 350 to 400 million monthly active users, and they're monetizing 0 from ads right now. The potential there, I'd say, is quite easily 800 million, and far more likely 2 to 3 billion on a company that does about 4.5 billion of revenue. So I'd say 50% revenue growth from ads in the next 3 years, which is huge. The second thing is that Roblox is truly not a game, it's a platform. So I think people look at them like they're a game, and they're not. Look at Roblox the way you look at iOS. It's not a game, it's a platform. Lots of games on iOS. Roblox is changing the way it charges, so that if you, an established game maker, established game, bring your audience to their platform, they will charge you the same rates that Apple and Google and Microsoft and Sony charge on their platforms. If they get the first company to do that, the floodgates are going to open, and they're going to get a lot of companies. I think they're going to end up taking that 350, 400 million users and opening up to games like Fortnite and League of Legends, which should be there right now. And that will in turn probably double or triple their revenue. So you're looking at a company that generates a huge free cash flow margin, huge, 70% incremental revenue growth, is free cash flow. And if they can double or triple revenues, and I think this happens in the next 3 years, double in 3 years, triple in 5.
Wow.
I think the stock's off to the races. So I think it's very likely it's a 5-bagger if you hold it for 5 years, which is okay. I like it a lot.
Wow.
And anything on the short reports that came out from Hindenburg? I think Bear Cave Research as well on Roblox.
Yeah, I think the Bear Cave guy is, very, very clearly an educated kid. He's 4 years out of Stanford, so I'm sure he's really super smart. But he's 4 years out of school, so his life experience is 4 years, and God bless him. I mean, I'm impressed by the kid. I think he's actually smart. I think he's wrong, but I think he's smart. The Hindenburg guys, I think, are just doing something either evil or stupid. They're taking a position that is completely specious. It's not fallacious. It's just idiotic. So Bloomberg did an expose on Roblox back in July, and they said Roblox has a sexual predator problem, and that's true. And Bloomberg wrote, I don't know, it's got to be a 30-page article, really good, about all the different problems. And in the final analysis, Roblox, with its, at the time, 300 million users in 23, had 13,000 reports of sexual predator activity. 13,000. That sounds really bad, right? It's like under 40 a day, 37. And their average daily users, 69 million. Okay.
Wow.
So let me put that in perspective. You're one of the 5 border states, Texas, New Mexico, Arizona, Nevada, California, which combined have 75 million people and truthfully about 75 million cars. And you find out that today there's going to be 40 drunk drivers on the road in those 5 states, 40 total, somewhere. We don't know where. Would you just not drive today because there's 40 drunk drivers? And by the way, there'll be 40 drunk drivers again tomorrow too, and the next day. Would you stop driving, or would you make sure your airbags worked and that all your tires were bolted down and you're wearing a seatbelt? And if it was your kid, would you tell your kid, look around and avoid drunk drivers and get out there? Yeah, because 40 drunk drivers in an area that massive with that many people, you won't even see one. So that's what the Bloomberg report showed us. That's what Hindenburg harped on. That's what the Bear Cave can't get his focus off of. I think he's written 5 reports that say exactly the same thing. Some guy on Twitter mocked him, which I thought was hilarious. And he said, here's a snapshot of the Bear Cave report from 2030. And it was like Bear Cave report 894. Roblox still has a sexual predator problem. They're not going away, right? The best thing you can do is weed them out and get rid of them and report them to the authorities, which Roblox is doing. Be as diligent as you can. And if you read the Bloomberg article, it actually said most of the sexual predator activity happens on Snap and Discord. that initiates on Roblox. The Roblox predator is so afraid of getting caught that he tries to lure the target away from Roblox onto one of those more lax platforms, Snap and Discord, so that he can send naked pictures. So I would say zero concern about that. Zero. Like,
okay. What about,
it should be zero tolerance, but zero concern.
What about, let's switch topics here. You mentioned Netflix earlier. Obviously, Netflix this upcoming weekend has this big fight, Jake Paul versus Mike Tyson. Seeing Netflix, a lot of buzz about that fight. But even before, this week, Netflix has been, a very hot story on the market. You can see it, the chart right here has just been on an absolute tear since that 80% drawdown in 2022. You mentioned the advertising tier, which was a very smart move by Netflix to get into that. What's next for Netflix here? I mean, do you think this growth will continue?
I was wrong about the presidential election, so I'm just going to reveal my bias here. I hope Tyson knocks that guy out with one punch, but we'll see what happens. And I'm actually going to watch it like the rest of you guys. I think they've got some runway. Netflix. What they're doing that I think is really interesting is they're exploiting their competitive advantage, and their competitive advantage is they have 280 million users and paying users, and tons and tons and tons of free cash flow. And they're the only streaming service, maybe, I don't think Max is considered streaming, but that's profitable. So Max is too. But and what they're doing, which I think is really interesting, single event live sports is not the way to go. So the Jake Paul Mike Tyson fight, it's fun and we talk about it, we're all going to watch it, but you wouldn't subscribe to Netflix or that. You go to a sports bar. I actually went past the sports bar yesterday. I was out and it said, come in Friday for the Jake Paul Mike Tyson fight. So you're not going to subscribe just to watch that. But will you subscribe to watch WWE? Yeah, I think you will. And so where I think that they're exceedingly smart on the live broadcast side is that now that they're in the advertising business, they figured out that if they have by appointment television, live broadcast, that they can advertise. And the way they're running the WWE feed, which is live, I think it's Monday, Thursday, and Friday or something, whatever, the SmackDown and Raw, and I can't remember what else they got. But they're running those shows the same time they used to be on USA Network. And so they're going to collect a ton of advertising revenue. And the interesting thing for them and for WWE is Netflix expands the reach of WWE beyond the US. So WWE might have had a deal in Mexico or in Ukraine or in which Netflix is there, or in Slovenia, but they probably not, and probably not in markets where maybe 100 or 1,000 people want to watch. Netflix is there, so they're going to advertise to those people as well. And it's a draw for those people. And the cool thing about the way they're running the content is live broadcast plus archived. So you can catch up on WWE. I think it's genius, and they're doing innovative things like that. The second thing they're doing that's really innovative is they're moving their their television production capability overseas. And they figured out that Korean content sells in the US. Now, we could say, well, we saw the movie Parasite or Snowpiercer, those are two movies by the same guy, that worked really well, and we kind of know that, but I didn't know it until I saw Parasite. It didn't occur to me. Parasite could have been set in Silicon Valley, with Caucasians instead of with Koreans, and it would have been the same movie and work. So they're producing content there like Squid Game, which costs 1/4 what it costs to produce here. And they're getting leverage in all these other regions like Australia, Singapore, Japan, obviously Korea. So I think that they're never going to get caught. They've got a massive competitive advantage. No one's catching up. And frankly, what the television broadcast networks should do and what the streaming services competitors should do is embrace Netflix, put it on broadcast cable, as part of the subscription, the way they did with HBO, 40 years ago, and make you subscribe to cable to get Netflix, Peacock, Disney, Paramount Plus, all the others. If they did that, they would preserve the cable ecosystem and then segment their windows so that Netflix doesn't get any TV shows until they've run their course for 10 years. If they did that, they would fight back and win, and Netflix would win too. the way they've handled this the last 10 years, Netflix has won. The cat's out of the bag. The broadcast guys are addicted to the Netflix fees, and their core business is deteriorating before our eyes, and they have no idea what they're doing. Remember, it's the same guys who won't advertise other networks' broadcast programs on their networks because they're afraid of losing a customer. They're so petrified to do something different that they just are screwing up royally. Iger, probably second worst among them. Les Moonves at CBS, the worst in the embrace of Netflix. And now Iger's apparently talking to Ted Sarandos at Netflix about a dual CEO structure because he wants to try it at Disney. Now he's so all in, he's going to emulate Netflix's management structure. So I think Netflix has won. And yes, I think it can keep going.
All right, we've been on the line with Michael Pachter, equity analyst over there at Wedbush Securities, joining us here for an extended session on pre-market prep. Michael, always a pleasure to talk to you, get your fundamental analysis of the markets. We'll be dialing you up again real soon.
Thank you, Joe.
Okay. All righty, y'all. We're a minute away from the open here. Looks like the S&P 500 is very flat, but up slightly here. We'll see someone in the chat ask about HIMS. I don't know if there was news on it. HIMS is down 13% in possible response to Amazon's introduction of its low upfront pricing telehealth and medication plan. So I guess people that the worry here is that people that have previously gone to HIMS for, generic drugs for different things can now potentially go to Amazon. I feel like we're just seeing more and more of these offerings pop up. Of course, you have that Mark Cuban pharmacy startup as well. So there's a lot of competition in this space to deliver people drugs for cheaper than what they would get it at their, normal pharmacy for.
Wow, that's a big haircut there for HIMS. Made a new all-time high yesterday. You know what? Amazon has mentioned this before, right? And I think I've kind of heard this story before with it. How long it takes? Will they actually get into it? You did get a much lower open here, 2408, but boom, you immediately bounced off 24. So anyone that got jammed in this short spin yesterday, it had the nice red bar. But they seem to be buying it off the open, at least up 58 cents off that low. Hard to pick a level. You had a previous low at 26.16. But you don't want Amazon, coming into your space. That's what happened. Lower open in HIMS to see if it attempts to rebound. If you do come back down through that open of $24, minor gap to fill at 23.61, but then you got a big old bar here on that up day. So that's a look at HIMS. And don't look now, but AAP, Advanced Auto Parts, going green on the session, up 320. I thought maybe about resistance at 40. There you go. They must have said something about something good on a conference call or something, but big turnaround there in AAP.
All right, let's see, what else is moving here off the open. I'm going to go to the chat real quick here and see if anyone has any things they want to. Someone's asked, Luis Blanco is asking about TLT, Joel, which is, not in my wheelhouse. I'm not looking at the TLT.
Ooh, well, I mean, tried to put a bottom in yesterday, right? And match that low from November. Trading up 72 cents today with the hotter inflation data. I don't know if that makes a ton of sense here, but you have a double bottom to lean on from today and then going back from earlier in November. What was that low? 89.55, and no, today's low is quite a bit above that. So trying to put a bottom in here. Got two lows in the same area. It's just needs to distance itself from that. Early in the session, yet still away from yesterday's high at 91.54. But I don't know. The hotter inflation numbers still have TLT up. Not exactly getting the correlation there, but hard to call a hard bottom in the TLT as of yet. House of Mouse, holy mackerel, still ripping through that pre-market high. We did talk to you about a potential gap fill at 114.15. You did get through that going to 114.81. So, wow, you could have bought an $8 higher open in Disney, made some money. Now it looks like you do have some sellers coming in a little bit to take it off that high of the session. S&P's tried to mount a rally here off the opening bell, stopped at 60.20, just hovering around unchanged. And I believe this is pretty much where we were. Let me go to the 15-minute chart. Oh, we were trading a little bit higher before we had that PPI data, 23.75. So right now, slight advantage to the Bears here in today's session. What else?
Mixed market. I'm just getting out of some of my positions here. Yeah. And you're seeing, obviously, Meta has continued to show weakness here, relative weakness. It seems like every morning. Same thing again, trying to break down to a new low. The last 3 days, not great for Meta. We talked about major resistance at 600. That held, and now it's falling off from that level. Keep in mind, by the dippers obviously sometimes emerge in this stock. Lunar, I sold 2/3 of the position here today. For the simple reason is, like, it was, we're probably going to get, some more hype in the new year as they obviously continue, but, catalyst hangover. So we had the earnings coming up, Rocket Lab had a big pop and then pulled back here. So I just decided to just ring the register here. It was basically a double for me. I think it was up 94% in it. So took that, gained most of it here, kept 1/3 of the position. Well, I may re-enter it at some point in time, still have a small piece, but sometimes this is the market where, just take the gains. Like, I don't want to VKTX, where obviously, you have the big move in VKTX, you don't take any of the gain, and then you watch, a major winner turn into a loser here. So sometimes we get these big pops, it's just good to ring the register here. So I've rung the register in Lunar here today. I sold at the open of 14.30.
Okay.
Talked about potentially selling half. Ended up deciding to sell 2/3.
Oh, good job on that one. I did see there was some Meta news. I'm trying to pull it up here about an EU
I'll grab it
fine.
for you.
Yeah, EU fine and Meta. Let's just do a quick technical here on Meta. Got up. Well, look at that $600 level. You hit that just 3 days ago, but that's where your big seller was, matching that high, just over 600. Peeling back. You're in an area where you need to find some support off the hop here. You're looking at, bearing down on like a 5-day low. So you just don't want to slip into this bar here. But right now, Meta down 345. Looks like SP still catching a bid here. Wow, Dennis, that Lunar. Now it's, oh no, that was a bad quote there. No, it is 1254.
Yeah, it's giving back a lot. Halted, limit down right now. Halted, limit down. So they've just moved it too far, too fast. Got up and got right to where it got pre-market 2 in the regular session, Joel. That 15 was a major level of resistance there. I got out at the open of 14.30, so it wasn't there, but, it is, pulling back here now. Catalyst hangover. You know what's interesting? Let's go to Tesla here for a second. I know you like these formations here, Joel. Look at the triple bottom from the last 3 days. So you got major support here now, 323, 322, and 323 here this morning. And now it's starting to show a little bit of life here, where it was very weak, one of the weakest stocks this morning. Actually, they bought that right from the opening print here. Keep in mind, too, the retail memester trade is on again here, too. GameStop lifting a little bit in the pre-market. AMC, which I have some calls on, is starting to show a little bit of life here as well. So, just watching, some of these major movers here. But if the retail theme starts to get hot here again, that's not necessarily a bad thing for Tesla.
Tesla, it's kind of decoupled from the Bitcoin a little bit over the last couple days. I did notice that. But yeah, I mean, you got a good level. I mean, we do like multiple lows in the same area. You do have that for Tesla. You do lose that, and you got some ways to go to the next daily low, 297.66. But support is support until it's taken out. What other stocks did we? Oh, did you see?
Let's talk some SMCI real quick, and then I've got a couple tickers from the chat. So it's kind of, I feel like a broken record here on SMCI. It feels like every single morning we do this show, it's down another 10% now, below $20, down to $18.42. And there's a danger here that the stock gets delisted. So There was a headline yesterday that the delisting risk just shot up here. The company delayed their 10Q filing, says it needs more time to find a new auditor. So they had, I think it was like 45 days or something to find a new auditor after, of course, Ernst & Young dropped out and did not want to be involved with the company anymore. Not a good sign there. Not a good sign that they're having trouble finding a new auditor. The market clearly has made its decision on SMCI punishing it again this morning. So I think you're just in a zone here where it's a no-touch zone, and we just got to watch and wait and see what happens.
Yeah, I mean, thank goodness I sold it at 35 that day, when it was down and in the hole, and I'm like, but once that was the day the auditors quit, and I'm like, this is the time to go. I'm like, there's no buying the dip here. I sold at 35, and it actually went up to 37 or 38, like that morning. And I had multiple people tweet out at me, like, you just sold the bottom, Dennis. I was like, I don't know. Then the bottom fell out the next day, the next day, the next day, and the next day. Like you said, AB, it's just a death by 1,000 cuts here now. This story, was so awesome in the first half and so terrible in the second half. I don't think I've ever seen a story turn as violently as SMCI. But I mean, again, when you can't believe the books, you can't believe anything here. So it was a great trade for me in the first half. I lost money on it in the second half. Been out of it. You can't mess around with stuff that's potentially get delisted. I mean, it could come back. They get the filing, could get delisted, could come back. But, at the same time, let that be somebody else's problem. I'm out of it.
All right, Dennis, did you want to address something in the chat here?
Yeah, Paul just saying, Dennis seems to be, in a lot of, smaller names, speculative names. The majority of my portfolio, 90% still blue chip, not so much value, but the value versus growth. And this is such a great, thing to talk about here. It's in some markets, value stocks, are favored. And then, in some markets, growth stocks are favored. More often in the last few years, it's been growth. Not 2022 because they were really hitting the growth stocks, but in the last 2 years, growth's really, been the play, and sometimes you think like you come in and you're like, the Bristol Myers was a pure value play, that I had bought in 42 at this, thought the stock had gotten too low. P was 6, and I'm like, there's just value there. I think I can wait it out. Some trades like Lunar that we just had are speculative. That's a pure spec. Where, you're thinking, they got the moon, they got the contract. I liked it that they got that contract because the contract was so big relative to the market cap. Again, it's stages, so it's not necessarily they're going to get all that earnings. But, there's the catalyst. They're going to try to get back to the moon. They're going to do lots of things like that. But it's just really had a run. I mean, I don't like the action from Rocket Lab yesterday where RKLB, was way up, and then all afternoon they sold it. And we've just been in this market right now where they're more inclined to, it seems like, the fade trade on certain things, happen eventually. Like even Upstart, for instance, UPST gapped up, went up, 25 points from like 55 to basically 86, so 30 points. And now it's just quietly giving back 20. This is the type of market that we're in right now. If you don't take the gains, it seems like the market eventually takes them from you. So I still think we're choppy. The S&Ps aren't really climbing. IWN's trying to find its way. It doesn't feel like there's certain stocks that are blasting off, but there's also stocks that, are giving back gains. And it's been a mixed market. So I just don't feel like this is the kind of market where we're just going. I think, you take the gains as you got them and you move on. And, VKTX was an eye-opener for me here too. Fantastic, numbers, stock was up 20 points, but then you had Catalyst hangover. Catalyst hangover is just simply stocks want something to look forward to. They want to say, what's next? And, VKTX, now you're going to, phase 3 and phase 2 of, their injectable and their oral drug respectively. But I mean, you're in Catalyst hangover now. Like the data for that's going to be a long ways away. They're going to have to finance that. So, people asking, why does the stock go down every day? Well, what's it got in the immediate, future to look forward to here? Unless you have a random company buy it out, which is always a possibility with this. They got a long ways to go. So it's a spec. I'm still in, the position here. I did take off a little piece of it, but obviously not enough. And I'm averaging from $63. I'm looking at 54 and thinking it's Catalyst hangover. So you've just got to, it goes to show you in this market that we're in right now, when your stock pops 20, 30%, it's prudent to take the gains. Like Alibaba and the China trade, same thing. We got up quickly where China, FXI, was up 30% basically 2 weeks. Was now giving back most of those gains. So, the pattern here is like take the gains and the market takes them from you. And I think you've got to, be taking, when your stocks pop 20-30% a day, I think you've got to be taking money off the table, because we're not in this rip-roaring bull market that a lot of people want to say. We're in a bull market for sure, but it's not like everything's going, Joel. And you can add to this too. This has been a very mixed market, and gains in some cases have been very short-lived.
What about Kava Group yesterday? Another example here of a little bit too much too fast. I don't know how
Yeah,
that traded, and I'd like to see the pre-market action in this one too. If you had any, oh boy, look at that! You had a pre-market high of 172.65, and then in the regular session, wow, you got there 172.43. Dennis, we got a little bit of a sell-off going in here
we
in
do.
the S&Ps. We do here, losing some momentum here. Just breached the pre-market low pretty darn easily here. Just made a low 60050. Yesterday's low, you got down at 91.75 here. So market not digesting the inflation numbers well, Dennis. But what about the TLT trading up here? I'm kind of someone asked about that, trading up 78 cents here. So a little bit
A little bit.
contrary. Yeah,
Well,
yeah.
it's a little relief here. It's been such a disaster. At a certain point in time, a rate's going to continue, long-term rate's going to continue to go higher. The only way that really happens probably long-term is if inflation does creep back into this. And some people are worried about inflation. Some people are worried about, tariffs, the Trump administration coming in, hitting tariffs. Now all of a sudden everybody, if you're a Five Below, like maybe a poor example, but, they're going to get hit directly. Like you're bringing a lot of stuff in from China. If that stuff starts to get tariffs, you're going to have to raise prices. So, I mean, that's a consideration. We get a lot of stuff still from China, a lot of businesses. We know how much stuff comes over from China. So if you get into a situation where, tariffs start to come in and then, obviously the product cost is going up, that has to get passed on to the consumer. So I think some people are worried about inflation, and maybe that's a little bit to do with, how TLT has moved down and obviously long-term rates have gone up.
All right, Coinbase here, decoupling a little bit from Bitcoin. Look at this, Bitcoin up 1810. Coinbase here in the red by $4. I mean, it went from one.
We run too
How
far.
many? Yeah,
Yeah.
wow, wow, wow,
Your stock
wow.
doubles, Joel. When your stock doubled in Coinbase's case, your stock went from $176 to $334. That's basically a double. In 6 trading sessions, you ring the register. You ring the register, you ring the register, you ring the register. That's, how you trade. And you can be a long-term investor and, maybe some of that stuff, but a little bit of this is just, overdone moves. Is the Coinbase story over? Is crypto over? No. But is it overdone in the short term? I mean, that's an incredible move. $176 on November the 4th. 10 days later, 10 calendar days later, and not even 10 days, November the 11th when it hit 334, it doubled in a week. They got to take the gains when your stock doubles in a week. You just got to do it. I think we're in that market. Maybe other markets where we go double, triple, quadruple, we're not in this GameStop where, everything's going nuts here, though. This market is not everything going nuts. Some things are going nuts. Other things are coming in. And to the point of upstart, to the point of, even, just looking, obviously Coinbase, I'm just going through tickers here. Some of these gains, are just overdone. And, there's profit taking involved here. So I think, Rocket Lab even coming in here today too. I think you got to take the gains, man, in this market.
Wow, yeah, things really overdone. Rocket Labs coming in, getting in the game for the coin. I mean, a lot of times I say, selling into weakness is a hard thing to do here, but just so much air in this. Would it be buying it here? I would say you might even get a gap fill today here at 273.50. So rigging the register here on pretty good. Well, the volume's tapered off. Next potential support level 273.50. Looks like the momentum here is continuing to the downside. We are trying to hold at the nice round number of 6,000.
All right, some other news here. I do see that Norfolk Southern, ticker NSC, is avoiding a proxy fight with an activist investor. I think they made a deal to add someone else to the board. Yeah, to add one director with activists on Quora. And the market's not really loving this. You would think that avoiding the proxy fight would be better news, but the stock is still down about $1.70. I guess sometimes the market actually likes when the activist investors get some power and are able to push for some changes here. So Norfolk Southern, just some news here there, but not really moving too much on it.
Look at
Holding
that,
support.
266, Joel.
Yeah. Yep. There you go. I mean, that's what you got to look at. Holds the 266, but it's one thing. It's just not really getting away from it. So this one, big gap in here, probably from earnings. So look out if you take out 266. And on the upside, if they do mount another rally, take out the high of the day, you got a big seller perched at 270. So there you go. Wait for maybe a breakdown to the 266, or if you're looking for more on the upside, getting above 270 here for Norfolk Southern.
All
right. A couple
righty,
other ones, Capri, CPRI, down here again. It looks like for the second time the merger is officially dead. I guess it wasn't officially dead when the stock fell 50% one day, but today apparently it's officially dead. So Capri and Tapestry abandon their plans to merge. They're talking that Capri has revealed strategic initiatives to return to growth, trying to figure it out on their own. But let's be honest here, this story is an epic disaster. APR flying up $5 more on it though, Joel, because it wasn't enough when they said that the deal was done a month ago. They get another 5-point gain because the deal's still done. I'd ring the register on TPR because they're rallying at 5 points on the same damn news.
Yeah, S&P's getting a nice bounce here. Just another stock here that I saw in the chat. One we haven't talked about in a while, Alcoa. Boom, finding some, once again, 46 to 40 pretty quickly, trying to climb its way back. So if you're thinking about this going back to 46, I got to get back up to that $43 level. The buy the dippers came in here, Dennis. At 6,000. So it looks like we're going to have perhaps another choppy range-bound day here heading into the final day of the week.
What about Nucor? Here's a stock for you. Trump stock, steel. I mean, the stock had the big pop when Trump got elected from 145 to 170. Has leaked it mostly back, not filled the gap, but I'm not sure you're going to entirely fill the gap. I kind of like Nucor buying the dip here. Valuation's always been fairly reasonable in Nucor. I was in the stock for like 10 years, and then I finally sold it a couple years ago and moved on to other things. It was a good sale because it really's done nowhere for a couple years here. Thinking about reloading it though. PE on Nucor is 14. It is cyclical, but I just think when we're going to come into a Trump administration here, I don't think it's a bad idea to be long the steel stocks here. I'm interested in this one, buying the dip in Nucor. Chat, what do you think? Give me thoughts on Nucor. Joel, you got any thoughts on Nucor?
Boom. I mean, it's it had the pullback here. I mean, if maybe take a little bit of if you're interested in long term, maybe dip your toe in the water here, and then if it happens to come back down to that gap area, 145, perhaps reload. But looks like you had maybe got all your sellers out. You had that big up day when it went to 167.74, and then the volume is just tapering off. So everyone that probably sold into that, just maybe taking a little breather. I noticed X popped really nicely too. Look at that. Even with the merger off the table, it did get the Trump bump there, getting over to $42, but now that's coming back down to the 37 area, putting in a higher low from yesterday. Bicycle is adding CLF, Cleveland Cliffs.
Come down to had the
yeah.
Trump bump and then straight back down as well. There's not, a zero possibility that Cleveland Cliffs here could still get down and dirty with X as well. So, just keep that in mind. And, usually the acquirer goes down on that. And I do think I think X down at 30, X up here at 37, is a little bit, maybe, you got some risk here. But X down at 30 feels like almost a no-brainer. Cleveland Cliffs said they'd be a buyer in the low 30s. I mean, I don't think it's going to get, Nippon Steel's going to get a shot at getting this thing at 52. I think that's going to get blocked, especially under Trump administration even more. But, down near 30s, that's where Cleveland Cliffs has expressed interest too. So just keep that in mind for U.S. Steel and keep that in mind for Cleveland Cliffs.
All right, what else? We got
We got about 3 minutes here left. We're going to end a couple minutes early here. Me and Joel need to go and take our Advil and Tylenol and everything else. So we're going to go with 2 more minutes. Give us a couple last ticker symbols here. Just summing up this market, it is mixed once again, half red, half green. What is strong here today? Airlines are showing some strength here. Also, oil stocks. You don't usually see that. Oil strong and airline stocks together. Cats and dogs living happily in peace here. Tesla challenging that low here now again. So now you actually look like you are breaching that low. The overall market weakness is not helping this here either. And the meme stock trade, while it was starting to show a little bit of life, is starting to turn here too. GameStop trying to get back the gains as well.
Boom, real quick. Boeing, bad news, Boeing. Oh, another bad day yesterday. Man, trying to find about. I saw someone said they were looking at it at the 140 area. Well, you got a shot at that yesterday when it went under 140, but not much of a pop here. Never even, well, keep an eye on that close. That close from yesterday. Well, you're still green here. So I guess 139.97. 2 lows under 140, but Boeing still cannot get a mount
No bid.
a rally here.
Just
No
keeps
bid,
going
no
down.
bid.
Relentlessly sold.
Okay. Boom, and
When
Tesla.
they're talking when WYNN having a pretty good morning here. I didn't see the headline on this one. It's up $6, so obviously there's a headline of some sort that we've missed here. But this is a quiet reversal day for Wynn. Gates. I don't even see the headline here, what it is, but WYNN.
Yep. I'm not seeing anything on that over the last couple of days.
Let's see. Looks like there might be someone that got a passive stake in here. There's some filing that I'm seeing, a 13G. Let's see. I would have to go through this filing to see exactly what it was, but there might be someone that opened a new stake in the company.
Yeah, when you go through these filings on the fly. So it looks like it could be a new stake in here. WYNN. Big pop here, though. Wow, that's a huge pop. $100 is major resistance up there. That's a long ways away. Obviously, you're going to get into a gap area here, too.
Right.
It's a weird chart because, you gap down and then you kind of consolidate. Now you're gapping back up. Like the gap and the gap areas are always interesting. But this is a big pop for Wynn.
Yeah, keep an eye on $93. That was your high on November 5th and 92.30. So after that, you get into the gap area. But man, oh man, I guess we can end on just Lunar, Dennis. Holy mackerel! What dipped under $11?
It's a market where you got to take the gains. You got to take the gains when you got them. I think there's going to be a place to get back into Lunar when they start talking about, some dates for potentially, another lunar mission here. That's going to be a catalyst here. But right now, catalyst hangover here again. I think, we just got to keep talking about, event-driven trading, which is what I focus on, being long stocks ahead of events. Look at Netflix. I mean, straight up here again, they can't stop buying it ahead of this Tyson fight. Obviously, I think you're going to get the hangover Monday again. So if you've been long Netflix, probably at a certain point in time, it's going to be prudent to take the profits here because most of this Netflix gain in the last 7 days from 757 to 837 straight up. I mean, it's just people hyped about this fight. Everyone is talking about it, even though they're wearing the bigger gloves. I mean, I'm going nuts, even Michael Pachter saying, I like to see him knock him out in one punch. I would too, but they got the bigger gloves. So it's going to be real hard for Tyson to knock him out in one fight. That's the brutal thing. They went with the bigger gloves.
Yeah. Okay. All right. We're going to wrap it up, folks. Thanks for sticking with us through here at the beginning, our early hiccups. But once again, great crowd showing up here on pre-market prep. Tomorrow, option expiration. We start early, right? Because the 1st, the 8th, the 15th, the 3rd Friday of the month. That will bring you CC Legator at 8:35. And then we're going to hear from Cameron Dawson at 9 a.m. So another jam-packed show to end the week. So thanks for joining us here on Pre-Market Prep.
Thank you.